Gold just hit an all-time high. And I'm not talking about some small bump. We're talking record-breaking, history-making, jaw-dropping levels that nobody saw coming this fast. But here's the thing nobody's talking about. Canada might be sitting on the biggest financial opportunity of the decade. And most investors have absolutely no idea what's about to happen. If you're into finance, investing, or just trying to understand what's really happening with your money right now, do me a favor, hit that subscribe button, click that notification bell, because what I'm about to break down for you today could genuinely change how you look at markets forever. This is the kind of information that major institutions pay millions to access, and you're about to get it in the next 12 minutes. Trust me, you're going to want to stick around for this one. Now let me set the stage for you, because what's happening right now in global markets is nothing short of extraordinary. Gold prices have absolutely exploded in 2025. We're talking about the precious metal climbing past $2,400 an ounce. Some analysts are predicting it could hit $3,000 by the end of the year. That's not some wild conspiracy theory. That's coming from major banks, major institutions, people who move billions of dollars around like chess pieces. And here's where it gets really interesting. When gold surges like this, it doesn't happen in isolation. It sends shockwaves through every connected market on the planet. And guess which country has one of the strongest connections to gold in the entire world? Canada. But the real question is whether this surge is going to lift the Canadian stock market to new heights, or if something else entirely is brewing beneath the surface. Let me take you back for a second, because to understand where we're going, you need to understand where we've been. Gold has been humanity's most trusted store of value for over 5,000 years. Civilizations have risen and fallen, empires have crumbled to dust, currencies have become worthless paper, but gold has remained. It's survived every economic crisis, every war, every pandemic. And right now, in 2025, people are running back to it like never before. Why? Because the world feels uncertain. Inflation is still sticky in many economies. Interest rates are being cut in some places and held steady in others. Geopolitical tensions are rising. The Middle East remains unstable. Relations between major powers are strained. And when humans feel uncertain about the future, they do what they've always done. They buy gold. It's almost primal at this point, a psychological safety blanket that transcends generations and borders. But here's where Canada enters the picture. And trust me, this is where things get fascinating. Canada is one of the largest gold producers in the world. We're talking about a country that pulls billions of dollars worth of gold out of the ground every single year. Ontario alone has mining operations that would make your head spin. Quebec is loaded with deposits. The Yukon and British Columbia have operations running at full capacity. And here's the thing about gold mining companies. When gold prices surge, their profits don't just increase proportionally. They explode exponentially. Think about it. A mining company has relatively fixed costs. They've already invested in the equipment, the infrastructure, the labor. Whether gold is selling at $1,800 an ounce or $2,400 an ounce, their costs stay roughly the same. But that extra $600 per ounce goes almost directly to the bottom line. It's pure profit, and investors know this. So naturally, you'd expect Canadian mining stocks to be going through the roof right now, and many of them are. Barrick Gold, one of the giants, has seen significant movement. Kinross has been climbing. Agnico Eagle, headquartered right in Toronto, has been performing incredibly well. The Toronto Stock Exchange, which has the highest concentration of mining companies of any major exchange in the world, should theoretically be in a golden era. Pun absolutely intended. But here's the twist. Here's where this story takes a turn that most people aren't seeing. The broader Canadian stock market hasn't been keeping pace with what you'd expect. And that disconnect is creating one of the most interesting opportunities we've seen in years. Let me explain what I mean. The S&P TSX Composite, which is Canada's main stock index, includes a lot more than just mining companies. It's got banks, it's got energy companies, it's got real estate investment trusts, it's got technology firms. And while the mining sector has been riding the gold wave, other sectors have been facing headwinds. Canadian banks have been dealing with concerns about the housing market. Real estate trusts have been navigating high interest rate environments. Energy has been volatile with oil prices swinging based on global supply and demand. So even though gold stocks are surging, they're essentially being weighed down by these other sectors in the broader index. It's like having a sports car engine in a vehicle that's also carrying a ton of extra weight. The power is there, but it's not being fully expressed. Now here's where it gets really interesting. And this is what the smart money is watching right now. There's a phenomenon in markets that seasoned investors call sector rotation. When one sector starts outperforming dramatically, capital begins flowing toward it from underperforming sectors. It's like water finding its level. Money is always seeking the highest returns. And right now, gold miners are offering some of the best returns in the entire market. So what happens next? Slowly at first, then all at once, investors start reallocating. They sell their underperforming bank stocks. They reduce their real estate exposure, they trim their energy positions, and they pour that money into what's working, gold and precious metals. This rotation can create a self-fulfilling prophecy. As more money flows into mining stocks, their prices rise even further. That attracts more attention, more media coverage, more retail investors wanting a piece of the action, and the cycle accelerates. We've seen this happen before in Canadian markets. Back in the early 2000s, there was a commodities supercycle that transformed the TSX. Mining stocks went absolutely parabolic. Canada became the hottest market in the developed world for a period of time. Investors who positioned themselves early made life-changing money, and there are serious analysts right now suggesting we could be at the beginning of something similar. But hold on. Before you get too excited, there's another side to this story because markets are never simple. They're never straightforward. There's always something lurking beneath the surface that could change everything. And right now there are some serious concerns that we need to address. Gold surging is often a sign of fear. It means investors are worried, they're hedging against uncertainty. And while that's great for gold prices, it raises questions about the broader economy. If people are this nervous, what do they know that we don't? Is a recession coming? Is there a financial crisis brewing? Are we about to see another major market correction? Canada's economy is deeply tied to the United States. When America sneezes, Canada catches a cold. That's been true for decades. And right now, the American economy is sending mixed signals. Consumer spending remains resilient in some areas, but is weakening in others. The job market is cooling. Credit card debt is at all-time highs. Student loan payments have resumed. And the Federal Reserve is being extremely cautious about cutting interest rates too quickly. If the U.S. economy stumbles, Canada will feel it, no matter how well gold is performing. There's also the currency factor to consider. When gold surges in U.S. dollar terms, the Canadian dollar often strengthens alongside it because of Canada's resource-heavy economy. A stronger Canadian dollar is great for purchasing power, but it makes Canadian exports more expensive on the global market. It can actually hurt certain industries. Manufacturers struggle. Exporters face tighter margins. The economy becomes imbalanced. So while gold mining companies are celebrating, other Canadian businesses might be struggling behind the scenes. And here's something else that most people completely overlook. The Canadian housing market is still a massive question mark. Some of the biggest banks in Canada have significant exposure to mortgages. If housing prices correct sharply, if mortgage defaults start climbing, the banking sector could face serious headwinds, and banks make up a huge portion of the TSX. We're talking about Royal Bank, TD, BMO, Scotiabank, CIBC. These are massive institutions. If they stumble, the whole index feels it. Gold might be surging, but if the banks are struggling at the same time, the net effect on the broader market could be neutral or even negative. So where does that leave us? Is the Canadian stock market about to surge on the back of gold? Or is there too much baggage holding it back? The honest answer is that it depends on what happens next. And that's not a cop-out. That's the reality of markets. They're dynamic, they're constantly evolving, they respond to new information in real time. But here's what I can tell you with confidence. The setup right now is incredibly interesting. We have gold at all-time highs with predictions of going even higher. We have Canadian mining companies printing money. We have valuations in the gold sector that some analysts argue are still reasonable compared to historical levels. And we have a broader market that hasn't fully priced in what could happen if this gold rally continues. There's a concept in investing called asymmetric opportunities. It's when the potential upside significantly outweighs the potential downside. And for certain plays in the Canadian market right now, particularly in the gold and precious metal space, the asymmetry is notable. If gold continues climbing toward $3,000 an ounce, some of these mining stocks could double or even triple from current levels. If gold retreats, yes, there would be losses. But the companies with solid fundamentals and low production costs would likely weather the storm. The risk-reward ratio tilts in favor of the upside. But I want to be crystal clear about something. This is not financial advice. I'm just a guy breaking down what I see in the markets, what I'm reading from analysts, what the data seems to suggest. You should always do your own research. Talk to a financial advisor. Understand your own risk tolerance before making any investment decisions. Markets can be brutal. They can take your money faster than you can blink. Never invest more than you can afford to lose. That's not just a disclaimer. That's wisdom earned from watching people make devastating mistakes during every market cycle. Now let me leave you with this, because this is maybe the most important thing I'll say in this entire video. The people who make money in markets aren't the ones who chase performance. They're not the ones who buy after something has already surged. They're the ones who position themselves before the crowd arrives. They see the pieces on the chessboard and anticipate the moves 3 and 4 steps ahead. They understand that by the time something is on the front page of every news outlet, the easy money has already been made. The question you have to ask yourself is whether we're early in this gold story or whether we're late. Looking at the fundamentals, the geopolitical landscape, the monetary policy environment, and the technical levels, There's a compelling argument that we're still relatively early. Gold could have significant room to run, and if it does, Canada is uniquely positioned to benefit in ways that few other developed economies can match. The mining infrastructure is already there, the companies are already producing, the expertise exists, the regulatory environment is stable, it's all in place. The only question is whether capital flows in that direction, and if it does, the Canadian stock market could surprise a lot of people who have been underestimating it. And I've been studying markets for years. I've seen hype cycles come and go. I've watched people get rich and I've watched people lose everything. And if there's one lesson that stands out above all others, it's that the biggest opportunities often emerge when most people are looking somewhere else. Right now, everyone's obsessed with AI stocks. Everyone's talking about tech. Everyone's focused on the American market. But gold is quietly doing something historic. And Canada is quietly sitting on a potential gold mine. Again, pun intended. The question is whether you're paying attention. So here's what I want you to do right now. Drop a comment below and tell me what you think. Do you believe the Canadian stock market is about to surge on the back of this gold rally? Or do you think there are too many headwinds holding it back? I genuinely want to hear your perspective. This community is full of incredibly smart people, and some of the best insights come from the comments. Don't be shy, share your thoughts. And if this video gave you something to think about, if it opened your eyes to something you hadn't considered before, do me a favor, share it with someone who needs to hear it. Send it to your friend who's interested in investing. Send it to your family member who's been asking about gold. Send it to anyone who wants to understand what's really happening in markets right now. Information is power, and spreading knowledge is how we all get better together. If you made it this far, you're clearly serious about understanding finance and markets. You're not here for entertainment, you're here for education, for insight, for an edge. And that's exactly what this channel is about. If you haven't subscribed yet, now is the time. Hit that subscribe button, hit the notification bell so you never miss a video, because I'm going to keep bringing you content like this, breaking down the stories that matter, explaining the forces that move markets, helping you see the world through an investor's lens. The game is always being played whether you're participating or not. The only question is whether you're on the field or sitting in the stands watching your financial future be determined by others. Gold is surging, Canada is positioned, the opportunity is right there. What you do next is entirely up to you. Thanks for watching. I'll see you in the next one. You are a top-tier male YouTube narrator with a deep, confident, cinematic voice. Think Mr. Ballin plus Sam Sulik plus Wendigoon vibe. Write a voiceover script with these mandatory rules. Title: Gold prices are surging. Is Canada's stock market next? Script length, exactly 3,000 words, plus goes 8. Total video length, soccer 12 minutes format, pure paragraph style. No headings, no bullets, no numbering channel niche. Fairness, language, simple, clear, conversational, American English tone, high retention storytelling, curiosity, plus suspense, plus relatability. Hook, extremely strong, first 10-15 seconds only. Early CTA, natural subscribe, plus notification bell call within first 60 seconds. Curiosity, keep the audience hooked till the very end, use mini cliffhangers. Voice friendly, male voice optimized, short sentences, pauses, power words. Smooth flow, no robotic lines, sounds like a friend telling a wild story. CTAs, must include. Comment. CTA, specific question, share CTA. Strong engagement-focused ending, make them want to interact. Fixed structure, follow this exact flow. Killer hook, 0-15s. Shock, mystery, or wait what moment. Early CTA, 1560s. If you like this kind of story, hit subscribe and the bell. Setup plus stakes. Who, what, why it matters. Story beat 1, mini cliffhanger, story beat 2, bigger reveal, climax, twist resolution, plus lesson, mind blow engagement. Ending, powerful final line, comment prompt, specific, share line, send this to someone who needs to hear it. Last subscribe push, now write only the script. No extra text, no explanation.